Okay, we will kick off our next session, and the topic of this panel is all about changing customer expectations in lending. On the panel we have Leanne Jones, the CEO of Nemo Industries, James Goodwin, the Chief Customer and Marketing Officer at Wiser, Richard Bray, the Chief Sales and Marketing Officer of MoneyMe, Simone Van Veen, Chief Members Officer at Bank First, and moderating the panel we have Naveen Alawalia, I hope I said that right, I'm sorry.
Good job.
I'm sorry if I butchered it, Executive for Policy and Legal at the MFAA. Welcome.
So thank you, Rachel, and we can safely say that we're at the home stretch of this conference. It has been an amazing 2 days, I have to say, and it's been just absolutely fantastic. So with me on the panel, we've got two fintechs, a lending platform and a mutual bank, and I can say that it's a really diverse panel, and I think the calibre of the panel is absolutely fantastic. So I thought what we could do is, to start with, is firstly, it is a really big topic that we're talking about today. I mean, changing customer expectations in lending, it's not a new topic, but it's certainly a topic that's really quite important. And I think what we're going to explore today is where customer expectations are today, how much they've changed over the last short while, what lenders are doing to respond to those changes that we've seen, and then if we've got some time, and as it said, it is a big topic, but we're going to be doing some future thinking as well as to where we can see those expectations are going, particularly in the age of, say, for example, we've had conversations around CDR and AI. So I'm actually going to kick off just to talk a little bit about, I'm just going to give an introduction of like where I'm from. So I am the head of policy and legal at the Mortgage and Finance Association of Australia, and we represent almost 15,000 mortgage and finance brokers across the country, and it's a privilege to definitely be part of this panel. And so what I might actually do is ask each of the panel to introduce a little bit about your businesses as well. So I might actually start with Simone.
No worries, thanks Naveen. I'm the boring banker on the panel, so I'll try and be cool and groovy like the fintechs. My role, I work for Bank First. Bank First is an organisation that started 51 years ago. It started out as Victoria Teachers Credit Union, and basically 48 educators got together and said, we don't think the big banks are looking after teachers. They all threw $10 on the table and they started a credit union. And they basically got the purpose together of looking after those that care for community when others won't. Their first loan was to a single mother when other banks wouldn't lend to her, and we've kept that the whole way through. We're now renamed to Bank First. We look after teachers still, and we look after health, the health sector as well.
Richard?
Hello everyone. I'm Rich from MoneyMe. ASX listed lender. We specialise in direct and B2B to brokers and dealers, personal loans, digital credit cards and car finance. We also have a real estate vendor finance product. Think of it like a buy now pay later sort of for real estate, so when people want to sell their homes they can finance all the costs like furniture, staging, styling, marketing, and then pay upon settlement. And we have a credit score tool as well.
Hi, I'm Leanne Jones, CEO and co-founder at Nemo. And Simone, we can give you some runners and you can be a cool fintech and play with us.
I nearly wore my runners, but I knew they wouldn't stack up.
We are a white labelled SaaS business, and our core product is a digital platform. We're a B2B provider where we enable a lender to then take their member or their customer all the way from inquiry through the origination process, auto decisioning, settlement, all the way through to core banking. And it's a really interesting conversation around customer expectations, how we continue to drive and set new benchmarks around what people can expect in terms of money in the bank. So that's a key driver of ours.
Great, thanks. My name is James Goodwin. I'm the Chief Marketing and Customer Officer at Wiser. Wiser is also an ASX consumer lender. We offer personal loans and car loans. Our key difference is we also look to lengthen the relationship with our customers through focusing on financial health. So our typical customer for our lending platform is sort of a prime lender, so like a bank-like customer But we offer services across the whole spectrum of customers, both credit score checking, roundups to help save, and also financial coaching around smarter decisions around money.
Awesome, thank you. And as I said, we've got a very diverse panel, so I think we're going to get a lot of diverse views. So in terms of the first question that I'd like to ask, I think we can safely say that over the last sort of decade, we've seen quite a lot of innovation. We've seen a huge amount of digitisation, particularly in the financial services space. What I'm keen to explore with the panel is, in the last short while, what are some of the big shifts that you've seen in terms of what customers are now expecting of their lenders? And I'm also curious to see how you've actually responded to those big shifts in customer expectations. Richard, I might actually start off with you from a fintech perspective.
Yeah, sure. I suppose the big shift that really faced us, which was at the start, was COVID, really. Like when COVID came, while some people and other lenders and banks, I suppose, were like, how do we possibly navigate this of people not coming to branches or ATMs? Can you touch them? Or, how are we going to get paperwork processed? And these teams of people that sit in rooms or answer phones, that wasn't us at all. We were completely digital. So when people, like it accelerated the cashless society, which we absolutely grew through COVID. So people turned to their phones, they turned to online. I suppose it ripped the Band-Aid off of this whole learning curve of what consumers needed. They needed the push, and it gave them a beautiful push. So we grew and grew through COVID, and we were obviously encouraging them to try out online, and it's an alternative without bashing the banks. So we didn't want to go head-to-head with the banks and say how bad they were. We just were sort of, hey, here's an alternative. If there's a challenge, or if you're seeing a current challenge in waiting for approvals or getting decisions made, or if you can't go and meet someone in person, you can call us, because we pick up the phone within 8 seconds. You can apply and get approved and get a decision within an hour, or get the money in your account within an hour. So at the start, people didn't actually believe us. So it was finding that sort of tolerance of how hard do we market, but not putting the bank so far left field that we looked like unbelievable. But it massively helped us, and that was probably the biggest shift that accelerated us into the next sort of stage of business growth for us.
And I'm going to assume that over COVID, particularly at the very start of it, people were slightly stressed about their circumstances and what that would have meant for their jobs, and they were potentially looking at sort of going to get that really quick, easy finance. And I suspect that that's been a bit driver in terms of growth, particularly over that period for you.
It is, and we saw people borrow money for different things. So people that were looking ahead through COVID were going, okay, if I'm going to be locked down, now's the perfect time to do some renovations, or now's the perfect time to get cosmetic surgery, or other types of surgery, elective surgery, which we saw a massive increase in. Things like car loans and things where people were waiting weeks to get approvals, they could then buy this. But caravans and boats and like scooters and recreational things where people, a lot of people left the cities and moved to coastal towns and had properties, or were still being able to do like mountain biking and things that were allowed. We saw big increases for people borrowing for loans like that.
James, did you experience the same thing over COVID? Like, does that resonate? What Richard's talking about does that resonate with you?
Yeah, certainly. I think definitely people changed their behaviours in many ways, and I think for a lot of demographics that had never really used digital products, there was a huge influx, particularly in sort of different generations that would go to bricks and mortar. And just thinking about more broadly what's happened is that there's been a couple of things. We've had technology, and we've had data, and we've had new use cases for how we apply that. And I think what I've seen and what we see definitely at Wiser is that people are a lot more engaged with their money. They understand there's more choice. Choice is a huge thing for consumers, and Rich would probably agree that 5 years ago, fintech lenders were sort of an unknown new quantity. There was an element of trust, and that sort of trust is built over time. And now, people think about the democratization of wealth. There's now so many different ways people earn money, engage with money. They can, I can trade in the US on the US stock market from home. I can trade in crypto. I can have a side gig, and so people's whole financial lives have changed quite significantly in a short period of time, and therefore they're looking at different ways to manage that. And complex financial lives need simple solutions, and I think that's the big challenge that we all face.
Simone, I'm curious to get your perspective from a mutual bank that has been around for 50 years. You would have seen some really, really big shifts in terms of what customers come to expect from you in the 50 years, but in the last short while, I'd love to get what the bank is actually seeing.
Yeah, I actually was interested when you were talking about COVID, because I had the experience I changed jobs during COVID. So I was actually at a Big Four at the start of COVID and at a mutual bank at the end of COVID, and similar challenges in terms of the things you were talking around about customers who had been very dependent on bricks and mortar. That I saw the challenges in the big bank. That was then accelerated in the mutual bank, where the member base, with members are customers for us, where the customer base is quite old. The demographic is old. They were used to physical channels, and then all of a sudden couldn't access those physical channels. We're also obviously trying to attract a younger demographic as well. And what we really saw through COVID, what I've seen in the last 2 years since I've been in the mutual bank, is those customer expectations, because of that experience, although it was already going that way, and then COVID accelerated it, they just won't put up with it anymore in terms of non-seamless process. So the antiquated processes that had been running were just unacceptable, not just to customers, but actually to brokers as well, on behalf of their customers. So I think what happened, and the way that you guys were already digital, actually shifted the whole industry, because the banks had to catch up. Customers just demanded it.
I was going to say, we've actually found that the acceleration of knowing exactly where you're at in every single bit of the process, like from an Uber Eats or a Domino's Pizza mentality, people have now expected that from us, and we thought we were fast and transparent, but they want to know, your order is now here, it's about to go on the conveyor belt, they're adding the toppings, it's halfway cooked, it's in the box. They want to know every single detail, brokers as well as consumers. So we're trying to surface more transparency, because they want to know, and it stops a phone call and it stops a customer service interaction, which is we encourage, but it's a hassle for the consumer. They want to check an app, they want to see it digitally, and they want to move on with their life.
Couldn't agree more. I think expectations have shifted, and absolutely COVID had a lot to do with it. It was certainly the springboard to see much innovation and accelerate a lot of those advances in digital and technology. But I think of recent times, the data, the security issues, privacy really come to play out. And I think not only do our customers and your customers want seamless technology, they want a great interface, they want a great human experience, they want some transparency. And I'm kind of playing with the idea. It's kind of, they want to know exactly where it is in the scheme of the workflow, and it's almost presenting the digital solution in a transparent glass box rather than a black box. And I feel like for the last couple of years, whether it's an artificial intelligence perspective or digitalising processes, they're sat behind a black box, and people haven't been able to always understand it. But now needs to sit in a glass box where people know exactly what's going on, how it works, and from the lender perspective, that certainly helps in that regulatory environment to be able to understand how the back end works.
So I'm picking up the themes around sort of seamlessness, around transparency, around ease to yes, and a frictionless experience, I think, is what it seems like customers today really want, and that, I guess, instant gratification.
Abs, can I add to that, the instantaneous nature of things and the rapid nature? It's amazing how some things become the norm very quickly, and time to yes used to be the battlefield with banks and lenders. How quickly can we take someone off the market, give them an approval, a conditional approval or an unconditional approval? But now it's really a race to time to money in the bank, into the customer's hands. And I know our platform at Nemo, we're able to get a loan from inquiry to money in the bank in the same day. It really is the race, and I think that will continue to push that boundary. How quickly can we move it through?
Yeah, we've found challenges from a research point of view, and even from some marketing campaigns, where we were going down the race of how fast can we possibly do it. But back to customer expectations, a lot of the expectations were as long as I can apply, get information and have my money same day, that's pretty damn good. But when we started marketing, we can do it in 60 minutes or in an hour, then it comes at the cost of people going, hang on, is it like, if it's too fast and it's too good, then quality, or is it expensive? Or can it actually be done? Like when we launched our car finance product, because the market was so far behind or so long, when we went out there saying, approval settlement within 60 minutes, 7 days a week, the market didn't believe it. So a lot of people didn't come on board because they were like, there's no way that can be done.
I think, just picking up those points, there's in the endeavour to become fast and seamless, I think you can also lose trust. So for us, it's also putting the right amount of friction in the right spot. So, whether it be IDing a customer or, verifying their mobile phone, that extra step goes, while it's an extra step for the customer, they go, well, I feel a bit more secure because I'm getting these signals that this company is thinking about security, they're thinking about whether or not this is legit. And I think, you sort of got to find that balance between really easy points, but customers are also looking for that just a little bit of friction where it means that they can build some trust with the brand and experience.
James, just to add to that, we were in a roundtable earlier today, and personalisation was quite a key topic, and how that then helps to build a longer and deeper relationship with the customer, where trust is absolutely critical. And it was an interesting conversation around where those personalisation factors, where they play out in the workflow, and it can be done wrong. There are points in the process where if you do it incorrectly, it can have a really unfavourable experience for the member. So personalisation. I think we've got to move from personalising and selling to event-based personalisation activities that really add value to the customer experience, so that they can, whether it's a proactive move, we're about to, your home loan's due, we're about to take funds out of your account, here's an SMS.
Go on.
No, I was just going to say, because particularly when you're moving people's money, people want to know where it's at, just like Rich said, and if they have to go looking for it, it's an issue for the customer. So, particularly when money's moving between accounts, and we round up money in people's accounts every week and put it towards a savings goal, and we send them an instantaneous push notification, or it's an email if it fails, and you've got to really make sure that you're being proactive with the customer as well.
And I'm interested to know, so we've talked about the fact that customers really want that sort of instant, although there will be things in the system where you look to build trust around that, but ultimately speed is, I think, really important for each of your businesses. I'd love to know, particularly in this regulatory environment, we're all in a consumer credit space, and there is a significant amount of regulation in this space, particularly around responsible lending, is how you actually balance that speed to yes with getting information to be able to meet your responsible lending requirements, and how that actually plays in to the customer journey.
Oh, I can.
Sorry.
Shall we tap dance and interpretive mime? I thank everyone for attending this afternoon as we're on the tail end. From a provider, a FinTech perspective, we have to enable our lenders and banks to be able to ask the right questions. So we have to make sure that we're across responsible lending, the questions, the workflows, where the data sets live, so that our lenders can then really fulfil those regulatory obligations.
Yeah, and I think from our point of view, we really think about the right moments to contact me. Like, responsible lending is the cornerstone of what our business is, and for us, it's automating the things that you can automate, but finding out where are the important parts you need human interaction, either to verify hindsight internally or to contact the customer. And so, every loan that goes out the door requires at least one human interaction, even if it's just a call to say hello. And I think we're talking about the personalisation piece, and I think it's a nice touch. Even though the experience is digital, people still want to know that there's a person on the other side of the screen, and there's a company that's there and they're available.
That was, I was going to say. Sorry.
I was going to add, we've experimented with literally removing 1-300 numbers off certain pages versus others, and having feedback that. Or removing live chat to try and encourage a full digital process just to test. And it always, 99% of the time, goes back to I need a number there. A number builds trust. Live chat's there if I need it. They still want someone there. Like, we run our call operations for much longer than we need to, like till 9, 10 o'clock, just for those few calls that come in, but for the trust, rather than just running them 9 till 5 and that's it.
Yeah, I have to say so we're talking about human interaction and engagement, and that's a topic that's very close to my heart. With an industry association that has nearly 15,000 members, and our data shows that at least in the home lending space, that 70% of all new home loans go through brokers. That actually says quite a lot about the fact that people, particularly if they're making really big financial decisions in their lives, they actually want to speak to a human. That's the takeaway that we have. But I'm keen to explore, and I might actually go to you, Simone, around, firstly, I know that you do use the broker channel, but particularly how important do you think human engagement is in the origination and then through the lending process?
I think the themes we're talking about are all really interlinked. So I think the tech needs to be smooth and the process needs to be seamless for the process orientated things customers want to do. But it can't show humanity. And I think there's points in time and in points of that journey where, as a customer, I'm not getting a home loan. I'm buying a home, and I've got a personal circumstance, and I need some humanity at certain points, from origination all the way through. Actually, that I know you understand. I have questions. I've got worry. I've got concern, and you will show me empathy and be able to work with me in those moments. And then I want to be able to use the tech to go through the process when I don't need that. So I think the combination of the two is really important, and we see it even in our physical channels. Actually, we see a large portion of our members still choose to go through broker because there's an independence, there's a person who will show them humanity, and they feel like they can trust them because they will have a holistic view of what's going on in the market and act in their best interests. On the flip side, when we have customers coming direct through us, what I find really interesting around the point of trust, I'm not saying this is a good thing, but we have customers call our call centre about things that have nothing at all to do with banking because they trust our people. And so that just goes to show, as I said, I'm not saying it's a great thing, our call times are not ideal, but it just goes to show the importance of trust and the role that a human can play in that, and how important that is when people are making big life decisions.
I think in terms of digitalising lending, though, whether it's more of it's an and, not an or, it doesn't replace human interaction, and we prefer to think about it as an omni-channel. So if you digitalise through Nemo, the broker has their own dynamic access to the same portal, the same application that lender sees, the member sees, and broker sees.
Totally. It's an and they have to work together.
Absolutely. And then, you can have a choice whether I want to complete fulfilling that loan. I can do it together with my lender. I can do it on my own. I can do it sitting on the farm at my own pace.
Yeah, I was going to say, we actually encourage our customer service people to say, obviously the data's there in an online application that the person's taking a personal loan, they choose what the loan reason is for, and some people get quite descriptive. And that information is all sitting there when the phone operator picks up the phone. So we encourage them to ask, you've taken out a personal loan to buy a car, what type of car did you buy? Or it's for a renovation, how did the renovation go? What did you do? Like that, it's amazing when you hear a phone recording and you listen to it. It's a very flat conversation, and the moment you ask a personalised question like that to the consumer, it completely changes. The energy lifts, and the person's happy to tell the story, and they end up having a conversation where two people connect, rather than just a transactional conversation of someone's trying to get information and it's over. So we encourage that.
We're getting a signal that we're nearly out of time, but so in one sentence, what do you think is going to be the next big shift in terms of what customers will expect from their lenders? I know it's hard, one question or one sentence, but might start with you, Simone.
I should not have picked the end seat. It's a rookie mistake.
Sorry.
I saw you all run for the middle seats. I think it is going to be. So I can't do it in one sentence. I'll do as quick as I can. I think sustainability is going to be a ticket to the game. I don't think it's going to differentiate. I think it's going to be expected. Then you're going to compete. And I think when you start competing, it's going to be robots where it makes sense, overlaid with a human approach in those moments of need.
Yeah, I'd go the same. I'm going to go data and robots because I think the transparency of data. People want comparisons. They want to know how they're tracking compared to their peers or like peers, as well as our partners, real estate agents, brokers. They want to know how they're going versus the competition, so surface it. And robots to people want to know where they're at, and if a computer can do it to a level, they're happy with that. And then humans to do the last bit. But robots 80-90% of the way.
Ditto. Is that it? No. I think smarter with our data, so we can make better decisions, more proactive outbound calls, get to know the customer and the member at a deeper level. I think in the home lending space, I think what we'll see is an expansion of services in that ecosystem that includes real estate agents, being able to go to an auction, QR code, that'll probably be a thing of the past, I imagine, and being able to be very confident and moving the unconditional approval further forward in the journey so that someone has that absolute confidence within a very quick period of time.
Rounding out with James.
Yeah, I think the one thing that won't change is that companies don't build products; our customers do. Mm-hmm. And I think with what's happening with CDR and where the industry is going, customers will have greater control and greater say, and they will continue to dictate the products and services that get developed, and companies that don't. And yes, the experience can be enhanced by things like AI and robots and whatever else, but ultimately the customer expectations is the thing that's going to drive the industry forward, and that's going to drive the innovation.
Awesome. Can you give a round of applause to our amazing panellists today? Thank you all.